JJ the CPA here. Hope you're doing well. The EIDL loan, the Economic Injury Disaster Loan, let's talk about what you can use that for and what are some major things you can't use it for. Now, the first thing I want you to note is that you have 36 months from the date that you get the EIDL funds to use them for the purposes set out. So it's not a race. You're not trying to come up with ways to spend this money. You don't really need to worry yourself too much, in my opinion, as long as you have an ongoing business, you have ongoing expenses, and you're using these funds for the specific business that you applied for this economic injury disaster loan. The next thing I'll note to you is that when you're looking at what can I use this for, it's what you're already spending money on related to your business. Operational expenditures. I say it's easier to maybe think of it as ongoing expenditures. Now, here very recently in the last several weeks, the SBA has extended this to now allow you to use the EIDL funds to pay off, as they stated, prepay the principal on your business-related loans, including government loans. Now, before you could use the proceeds to make ongoing loan payments that are in your business that would include principal and interest, but before it was just ongoing payments. This specifically allows you to now, in essence, pay off any business loans that you have with these proceeds from the EIDL loan. And remember, what's key here is the L at the end. It is a loan. So no matter what, you're going to pay this back. So yes, there are, in essence, strings attached on what you can use it for. But remember, you're going to pay this back. So you're not trying to find expenses because you want to use this on your business for the expenses that you need to spend it on. Now, when we're talking about ongoing expenses, what I would probably say is this. If you're trying to be creative, if you're going, I wonder if I spent some money on this, would that qualify? I'm just going to stop you right there to first remember you have 36 months to spend this money. You are going to pay it back, but that probably is a good indicator to you that that might not be a proper use of the EIDL. When I talk to my clients in normal conditions, when we're talking about tax deductions, I call it the smirk test. So if you're smirking and asking yourself, I wonder if, probably isn't something that you would consider a proper expense. The other part I want you to remember is that it shouldn't be a huge mystery what you can use the EIDL funds for, because in essence, it's in line with what are you spending on your business that is in essence an allowable business deduction for tax purposes. Now, yes, there are certain things that a business can pay for that doesn't yield a tax deduction, but it's defined in the tax code as a business deduction that may be non-deductible. What am I even talking about here? Well, if ongoing expenses for your business are routine, related to business 100%, meals, when you're traveling, for instance, then that would be an ongoing expense. Now, in 21 and in 22, it is fully deductible. In 23, it'll go back to only 50% being deductible. If you're traveling for business, and I don't mean, so if I went here and called it business, we're not talking about that. But yes, if you're traveling for business, legitimate, and it's a business trip that would qualify as a tax deduction for your business, then that would be a permissible use. Now, for those that are thinking, well, I need a car. Well, are you in a business that already required having a vehicle? And it can't be, well, but I need a vehicle to get back and forth to work. Wrong. Did you already have a business vehicle that you're using for business? Many don't know this, but you get to write off a business vehicle based on its use. It doesn't matter that you have a magnet on the side or you bubble wrapped it and you say, oh, but I'm using it for advertising. Well, you only get to write off the magnetic sticker or the bubble wrap as advertising, when you're writing off a vehicle, it's only to the extent of your business usage, which is based on the key word there, usage, which is determined by how many miles you're driving for business versus personal. And so if you don't have a already existing business vehicle, then no, you're not going to be in a position where you need to be able to, or you can use EIDL funds to go out and buy a vehicle, even if you're justifying it. Are you smirking? Are you kind of like, well, could I? Probably not. That probably means you don't already have a business vehicle that you're using. Because if you're worried about an expense, then guess what? It probably isn't an expense that you would be able to use for EIDL purposes. Now let's back up, because these were the most common questions that I got: meals and travel and an automobile. So when you're looking at what your business is, then what are the normal, ordinary, and customary expenses for your business, in essence, that you've already been spending money on? That's the purpose of the economic injury disaster loan, is that you'd be able to continue the business that you already are in, which means that this is not to, in essence, expand your business. It's not to open another location. It's not, well, I have this other business, so I'm going to use the EIDL funds with this other business. Wrong, because you can only use the EIDL funds in the business in which you applied for this loan. So it seems like, oh gosh, it's so confusing, JJ, there's so many different. No, it's not confusing at all. It is not confusing at all. It's simple, really. Is it an ongoing business expense? Well, what's an ongoing business expense, JJ? Well, isn't it an expense that you normally would pay for in your business? Is it an expense that you're only spending because of your business? So it's not, well, I could use a new laptop, and then Johnny at home, my son, he might be able to use it too. If you're winking and smirking, then no. But here's the thing that I find curious, is that when you're thinking of the EIDL, given that you have 3 years to spend the money, if you have an ongoing business, I would assume you're going to be able to spend that on business purposes between now and 3 years, 36 months. And whatever you don't use in 36 months, guess what you have to do? Pay it back. You already are having to pay this back, but you'll just have to pay back at that time whatever you haven't used for proper purposes. And so in these economic times, these uncertain times, you shouldn't be in a race to use these funds. You shouldn't be trying to come up with new things to spend the money on. You don't really need to prepay anything to go, well, I need to hurry and use these funds. Remember, 36 months and you're paying this back. Now, I understand if you're watching this video, you're coming with the spirit of, well, I want to make sure I don't do anything wrong. And what I'm trying to do is relax you a little bit. Because here's the deal. Would you allow a business that you own to spend money that was put into the bank account? Yes. For business purpose, then most likely it's going to meet the requirements of a business expense that's ongoing. So what are some of the major things that you're not able to use the EIDL with? Well, as I indicated earlier, it's for only related to the business. So the major thing I would tell you is that if it's not related to the business, even if it's another business that you own, if it's not related to the business that got the EIDL, then it's not in essence, proper use. You're not able to pay yourself back any loans that you've put into the business. Now, shout out to Oscar. I had a phone consult with him that we talked through the uses. You can have a phone consult with me. I've got a link in the body of this video if you'd like to have one. But when I was talking with Oscar, he had a very wonderful question, which was he had expenses that he had incurred on behalf of the business, but due to what was going on economically, he had to pay some of these things out of his personal funds. And so he was inquiring, could he reimburse himself for business expenses? And we actually went through a number he really wanted to be conscientious of ensuring that what he was reimbursing himself was in fact a proper usage for the business. And so again, I talked with him about, well, is it something that you only spent money on because of your business? yes, then you'd be able to reimburse yourself. And Oscar was not being creative, so don't you get creative. I'm not trying for you to find ways to be creative for you to reimburse yourself. So Oscar was asking questions like, well, what about the renewal dues on the website for my business that I had to pay personally out of a personal account? Can I reimburse myself for that? Yes, clearly a business expense. He did inquire of, would he be able to reimburse himself mileage or auto-related expenses, something in that realm. And we really concluded together that the answer is no, because mileage, yes, it could be a business deduction, but it doesn't really fall under, in essence, an ongoing business expense to the owner. So if you have an ongoing business expense, whether you've put it on a credit card or a personal credit card, or you've paid it for yourself personally, then when you get that loan, if you've then paid for those things, you can reimburse yourself. Well, how far back can you reimburse yourself? I just say time out on that. Again, it's not a race to try and figure out how to hurry and use these funds. You want to leave them in the business. So one of the things that I would say is, yeah, okay, you spent money on this business personally, you want to reimburse yourself. All I would say is that when you're looking at the health of the business as you move forward, money in the business to pay for future ongoing expenses in the next 36 months is probably more key keeping your business going than trying to reimburse yourself potentially for monies that you have paid on behalf of the business. So right there, what I'm getting at is that not that Oscar was trying to find ways for him to be able to put a reimbursement to himself, but we did talk about, let's really think about though, do you really need to reimburse yourself because you already spent that money? Do you need these funds to keep the business going? That's the whole point of the economic injury disaster loan. Now, it used to be, as I told you earlier, that you couldn't pay off the principal of business loans. You can now, but I want you to really be mindful that this isn't any business loan. It's a business loan that's literally in the name of the business that got the EIDL. You may say, oh, well, I have a business vehicle. Well, hold. Is it titled in the business? Is the loan in the business? No. Well, you may think that's a business expense. You may be treating that vehicle as a business vehicle, but in the eyes of the IRS, for starters, but in the eyes of the SBA, you would not be able to go pay off that car loan unless it was titled in the business that got the loan, and the loan was in the name of the business. Now, a credit card, as I indicated to you earlier, many small business owners don't have a credit card in the name of their business because they're hard to come by. If you have an expense, whether it's on a personal card or a business card, it's a business expense. It just was, in essence, floated by this credit card company. So as long as you have receipts to back up what it is that you're spending your money on, whether it's for IRS or SBA purposes, showing that it's an ordinary and necessary business expense, then you would be able to, in essence, pay those dollars from your EIDL loan to then pay off that credit card only to the extent and only to the portion of whatever's on that card that's related to the business. You can continue to pay yourself wages if you are a business that can pay yourself W-2 wages as the owner, which is only an S Corp and only a C Corp. If you file a Schedule C, even if you're a single member LLC, by law, you are not an employee. You cannot pay yourself W-2 wages. Why? Because you're self-employed. It's same with Schedule F. If you're a partner and own a partnership, you cannot, by law, pay yourself wages. But if you do pay yourself wages out of the EIDL, you can, if needed, continue to pay yourself wages at the customary rate that you've already been paying. And now I may hear, oh, well, I wasn't able to pay myself as much, or I didn't have as much cash flow. Here's what I want you to remember, okay? It is a little bit taking a hammer to your head when you take a loan, whether it's from the EIDL, or you take a loan from the bank, a loan from a line of credit, a loan from yourself or a loan from anybody else and then pay yourself wages. Because when you get a loan, like the EIDL, that is a non-taxable event when you deposit it into your business account. It's a loan. You're going to pay it back. When you pay back the principal on that loan, the EIDL, you're not going to be able to write off the principal payments of that loan on your EIDL, just like any other loan. So follow me. You're going to take a loan from the SBA and then you want to pay yourself wages with it? If you're paying ongoing wages, okay, but let's think about this. You took a non-taxable source of money that came in and you turned it into a taxable source to yourself. And even if you go, well, but I paid myself wages, I get to deduct it, it's a zero-sum game, but you created payroll tax. So don't look at the EIDL as for those that pay yourself wages, but so how do I get money out of this? You're paying it back, okay? It's meant for the business, ongoing expenditures of the business.